Welcome to the Peninsula Pensions Guide to the Local Government Pension Scheme. The information in this guide is freely available, but the presentation itself must not be used without the permission of Peninsula Pensions. In this guide, we are going to look at what the Local Government Pension Scheme is, the benefits of becoming a member of the scheme, how you can increase the benefits you receive when you retire, how much it will cost you to pay into the pension scheme, and what happens if you leave. So what is the Local Government Pension Scheme? We are a nationwide pension scheme for all local government employees, all teaching support staff, and all police and fire support staff. We operate under central government legislation, and all your benefits are guaranteed, unlike a personal pension where your benefits are based on stocks and shares, and the value of your fund when you reach retirement age. The pension fund itself is separate from the council's budget, so they cannot take money out of the fund for other purposes. We are currently a career average revalued earnings pension scheme, bit of a mouthful, so we tend to call it a care or career average scheme. We will explain how this works in a minute. Under the Local Government Pension Scheme, the earliest voluntary retirement date is age 55, and your normal pension date is linked to your state pension age. If you retire before your state pension age, you will suffer an actuarial reduction on your benefits. Now let's explain how the current care pension scheme works. We calculate your pension, per annum, each year, by looking at the pay you pay pension contributions on, from the 1st of April to the 31st of March the following year. We take this figure, take a 49th of it, add a cost of living increase, currently linked to the Consumer Price Index, CPI, and the result is your pension per annum, accrued for the year, payable at your state pension age. In the example we have here, we start with a balance of 0. At the 31st of March the following year, we get told that this person has paid pension contributions on £24,500. We take a 49th of this, which gives a pension of £500 per annum. We add the cost of living increase to it, and at the end of year 1 this person has accrued a pension of £515 per annum. We carry this forward to year 2. At the end of year 2 we get told this person has paid pension contributions on £25,333. Again we take a 49th, which gives a pension of £517, and add that to the £515 we carried forward. We then add the cost of living increase, which gives us a pension, at the end of year 2, of £1,064. So in effect you are banking pension each year. You can see here the scheme employee contribution rates from April 2023. The band you fall under is based on your actual annual pay. You receive tax relief on your contributions, in that your pension is taken out of your salary before you pay tax. The cost of providing you with your local government pension is split between you and your employer. On average, you pay 1/3 of the cost, and your employer pays 2/3. If you pay into the 50-50 pension scheme, which we will mention in a minute, you pay half the contribution rate. There are 2 sections to the Local Government Pension Scheme: the main scheme and the 50-50 scheme. By paying into the 50-50 scheme, you pay half the contributions for half the benefits. You can join the scheme at any point during your career. If you have more than one post, you can pay into the 50-50 on one post, and into the main scheme on another. Whilst paying into the 50-50 scheme, you get the same level of life and ill health cover that you do under the main scheme. This is because your employer still pays the full contribution rate. It's a short-term option for 3 years. After that, you will be brought back into the main scheme. You can, however, if you wish, rejoin the 50-50 scheme. As part of your local government pension, you can choose to give up some of your pension on retirement to receive a tax-free lump sum. For every £1 of your pension that you give up, you will receive £12 of tax-free lump sum. In the example we have here, the member retires with a pension of £20,000 per annum. They elect to give up £1,000 per annum worth of pension to receive a tax-free lump sum. This gives a pension of £19,000 and they receive a tax-free lump sum of £12,000. There are maximums you can receive in terms of lump sum, and it is 25% of your total fund value. Peninsula Pensions will give you this figure on retirement, and you can also see the maximum tax-free cash lump sum by looking at your figures at normal pension age on your annual benefit statement. There are a number of ways of retiring early in the local government pension scheme, some of which are voluntary, some of which require authorization from your employer. Under the current local government pension scheme, you can leave from age 55 onwards voluntarily, but you will suffer an actuarial reduction on your benefits. The reductions can be found on our website. One of the employer discretions that may be available to you is flexible retirement. Flexible retirement involves you taking a reduction in your hours or grade, in line with your employer's policy. You can then take your benefits, with reduction, and continue in employment on the lower grade or hours. You can also pay into the LGPS again, on the reduced contract, to build up an additional pension. Flexible retirement is a way of you easing yourself into retirement, whilst your employer keeps your knowledge and skills. If you are made redundant, from age 55 onwards, and have 2 years in the pension scheme, your benefits will be brought into payment, based on your service from commencement, in the pension scheme, to your date of being made redundant. You would not suffer the actuarial reduction that you would, were you to retire voluntarily. If you suffer from any ill health, your benefits can be brought into payment at any age, and you can be enhanced to your normal pension age, depending on your ability to undertake future employment. As part of your local government pension, there are a range of death benefits. We pay spouses, civil partners, and nominate cohabitee pensions. For a cohabitee pension, we check whether you are living together and are financially dependent on each other. We do this for a period of 2 years, and would ask for a bank statement in both names or bills at the same address. We also pay children's pensions up to the age of 18, and if in full-time education, up to the age of 23. If your child suffers from a disability, they can be payable for life. As part of your LGPS package, you have some life cover. From day one of being a member, if you were to pass away, a death grant of the equivalent of 3 times your actual salary is payable. Once you start receiving your pension, you are guaranteed 10 years of pension. If you pass away during the first 10 years, a death grant of the equivalent of the remainder of the 10 years is payable. For example, if you were to pass away 6 years into receiving your pension, a balance of 4 years' pension is payable as a death grant. Peninsula Pensions have complete discretion as to where any death grant is paid. We look to see whether the deceased has a will, or whether they have filled in one of our expression of wish forms. The expression of wish form can be completed on our member self-service portal, which we will talk about shortly. There are 3 ways of increasing your benefits in the local government pension scheme. They are additional pension contributions, known as APCs, additional voluntary contributions, known as AVCs, transfer previous pensions to the LGPS. Additional pension contributions involve you purchasing an amount of pension at retirement age. You can pay for it as a one-off lump sum or as a fixed monthly amount. The cost is based on actuarial factors. By purchasing additional pension contributions, you are buying pension for yourself. It does not provide spouses benefits. If you retire early, you will also suffer the same actuarial reductions that you would suffer on your main scheme benefits. Another option available to you is additional voluntary contributions, AVCs. Our scheme is run through Prudential and is a bit more like a personal pension. You get to choose how your money is invested and can change this throughout your period of contribution. You can pay in as much or as little as you want, stop, start, and vary payments. By paying into the scheme, you are building up a fund, in which you have varying options as to what you can do at retirement age. You can take your fund as a tax-free lump sum, transfer it into the main scheme to buy you pension, or take it to any insurance company to see what it will purchase as a pension. The final way of increasing your benefits is to transfer in other pension rights from elsewhere. This is a time-limited option, and an indication of your interest in transferring has to be submitted within the first 12 months of being in the scheme. If you request a transfer after 1 year, it becomes an employer discretion as to whether to allow it. When making any choices about increasing your pension benefits, you should always take independent financial advice. We recommend that you look at the Money Helper website. It is a government-backed website that will give you free and impartial guidance. The site also gives you access to a choice of independent financial advisors. You can see the link to the Money Helper website here. So what happens if you leave before you can access your pension benefits? If you have been in the scheme for less than 2 years, and you have no other posts paying into the local government pension scheme, or other local government pension elsewhere, you would be entitled to a refund of contributions, or transfer to another pension scheme. We will talk further about the transfer option shortly. If you have been in the scheme for more than 2 years, or have another post paying into the local government pension scheme, or other local government pension elsewhere, you will be entitled to a deferred pension. This is based on your service, to date of leaving, in the pension scheme. Your pension is then index-linked, in line with the Consumer Price Index, CPI, up to and beyond your normal pension age. You can access your benefits from age 55 onwards, with an actuarial reduction, or at normal pension age unreduced. It is possible to transfer your pension rights to another pension scheme. You must have left your employment more than 1 year before your normal pension age. An option to transfer, other than any AVCs you may have, must be received at least 12 months before your normal pension age. Deciding to transfer your benefits is an important decision, and we recommend that you read all the information and links relating to this on our website so that you are fully informed of the potential risks with doing so. So to summarize, by being a member of the local government pension scheme, you get a secure annual pension, the option to take a tax-free lump sum on retirement, option to draw your pension between 55 and 75, death benefit cover for your loved ones, option to pay into the 50/50 scheme. Peninsula Pensions has its own member self-service facility. We advise you to sign up to this. Member self-service allows you to look at your record and see what we hold for you. It also allows you to do your own benefit calculations, which if your retirement date is more than a year in advance, would be as accurate as Peninsula Pensions could provide you. You can also view your annual benefit statements, update your contact details, and complete the expression of wish form. Once you retire, you can view your pay advices, P60s, and update your bank details. You can sign up to Member Self-Service on our website. If we have your email address on record, you will receive an activation key via email. If not, you will receive a letter with the activation key through the post. Once signed up, you will receive all correspondence via Member Self-Service. If you do not sign up, you will not receive any annual benefit statement from us. There is a video guide on how to sign up, available on the Member Self-Service page of our website. For further information on the LGPS, please visit our website, www.peninsulapensions.org.uk. You can call us on 01392 383 200. You can also use the Contact Us option within your Member Self-Service account. Further information on the local government pension scheme, together with the additional pension contributions calculator, can be found on the Central Members website, www.lgpsmember.org. For additional voluntary contributions, please visit Prudential's dedicated local government website. The Public Sector Pensions Act 2013 introduced a requirement for the local government pension scheme administering authorities to establish a pensions board. The Pensions Board assists administering authorities in compliance with the local government pension scheme regulations and any other legislation relating to the governance and administration of the scheme imposed by the pensions regulator. For more information about the board and contact details for your employee representatives, please visit the Pensions Board section of the Peninsula Pensions website. The information contained in this video is the author's interpretation of the current regulations. The information is subject to change due to various factors, including, but not limited to, changes to rules and regulations introduced by the Government Actuaries Department, GAD, His Majesty's Revenue and Customs, HMRC, or the Department for Levelling Up, Housing and Communities, DLUHC. Changes can happen at short notice and may be implemented prior to the Council issuing any future revised documentation. Readers should take their own legal and financial advice on the interpretation of any particular piece of legislation. No responsibility whatsoever will be assumed by Peninsula Pensions for any direct or consequential loss, financial or otherwise, damage or inconvenience, or any other obligation or liability incurred by readers relying on information contained in this video.